Right. So, Messrs. Audit and Company were appointed as internal auditors of Messrs. Manufacturing Limited, whose shares were held by Mr. F, Mrs. F, Mr. D, and Ms. D in equal proportion. Okay. See, a senior and his article assistant, Mr. Junior, were a part of the team which was looking after the above assignment. As a part of the work, Junior was required to take care of the P2P internal controls established to, right? So, purchases, right, established to ensure the three-way match is properly functioning. Being new to internal audit, he asked for help from a fellow team member regarding the above matter. Right, so they were appointed to do the internal audit. Okay. After completing the audit, the firm submitted the report to the board of directors of the company. A copy of the same was also sent to the company's statutory auditor. The report had clearly mentioned that the existing internal audit system of the company was not commensurate with the size and nature of its business. So, statutory auditor, clause 14 of CARO, you will have to report on the same, that the internal audit system of the company is not commensurate with the size and nature of its business. Okay. Following this, the company offered the assignment of tax audit to Audit and Company itself. Ayo, internal auditor, can they be appointed as tax auditor? No. All the partners were very happy to accept the offer, except CNU, an ex-article assistant and newly inducted partner of the firm. He was of the opinion that if the offer is accepted, it would lead to professional misconduct under Clause 1, Clause 4, Part 1, Second Schedule. However, despite his advice, the firm went on to accept the offer. After the above incident, CNU resigned from the firm and started his own practice as a sole proprietor. Few days after the resignation of CNU, the following things happened. Audit and Company had advertised the changes in the partnership of the firm by limiting the added to a bare statement of facts and consideration given to the appropriateness of the area of distribution of the magazine. Looks good. CNU issued a classified advertisement in the newsletter of the institute seeking partnership. The ad contained the name, the phone number, and the address of the social networking sites. If you read the detailed provisions of Clause 6 and Clause 7 of the Part 1 of the first schedule, immediately this should be, ringing bells in your head that whether it is right or wrong. Based on the above, answer the question. Assuming yourself to be the fellow team member of Mr. Junior, explain him what is a three-way match internal control over the involved in the purchase to payment process. Matching the purchase order, sales order, invoice raised to ensure the quantity of the intended goods which have been invoiced and proper control of inventory is maintained. Sales order, goods delivery note, invoice. How come sales order is coming into the picture? Sales order, invoice, and payment receipt details to ensure that all order quantity of intended goods have been invoiced and payment for the same is received, or matching of the PO, goods received note, and invoice to ensure all ordered quantity of the intended goods have been received and invoiced accordingly. Okay. Assuming yourself to be the statutory auditor of the company, would you need to mention about the details in the internal audit under CARO? If yes, under which clause? Right. So 14, the above matter did not be reported, put it under EOM, clause 18 of the CARO, clause 15 of the CARO. So it comes under clause 14, right? Clause 18 is regarding the cash losses. Clause 15 is regarding the non-cash transaction. Okay. From the above information of Messrs. Manufacturing Limited appointed as internal auditor, what would you infer about the paid up share capital, outstanding deposits, and the turnover? Right, so manufacturing, what do we say? Deposits of more than or equal to 25 crore. Right, so 20, 25, 25, 15. So A and B out. Right, then paid up share capital of more than or equal to 50 crore. Okay, so anyways, turnover has to be more than or equal to 200 crore. Will accepting the tax audit offer lead to professional misconduct? If yes, under which clause? No, there will be no misconduct. Yes, by accepting the offer, the firm will be guilty of misconduct under 412. Under 1211, 1211 is signing, and then it says 212, which is certified without examining the related records. No, so it is 412. Okay, and comment on the following incidents 1 and 2 discussed in the scenario from the perspective of ethics as per the CA Act. Audit and Company advertised the change in the partnership as a bare statement of fact for no guilty. And CNU issued a classified advertisement in the newsletter of the Institute for Seeking Partnership, and the ad contains of the social networking site. So what does it say? Neither of the incidents violate any of the provisions of the Act, and hence there is no professional misconduct. Okay. Right, So that was a good case study over there.